Let's start with the basic of financial market. A financial market is a platform where people and institutions exchange the financial asset like stock, a bond, or other security. It operates with the clear rules and regulation to ensure fairness and transparency in transaction. The key function of financial market is to connect two groups, which is those who need money or capital like business or government, and those who have surplus money and want to invest like individual investor or institution. In simple terms, it's a marketplace for financial transaction, facilitating the flow of funds in the economy.
Okay, moving on to the next one is types of financial market. The first type is primary market versus secondary market. In primary market, new securities are created and sold for the first time. Companies sell their stock or bond to the investor in order to raise capital. For example, private company issue initial public offering, right issue, share, bond, and whatnot. The secondary market is where the previously issued securities are traded between investors. It doesn't involve any transaction between companies and it didn't benefit the company at all. For example, shareholders sell stock between traders at Bursa Saham Malaysia. So, what is these securities? There are three securities. First one is equity securities such as shares. The second one is liability securities such as bond, and third one is hybrid securities such as convertible preferred share or convertible bond.
So this is the second types of financial market, which is money market versus capital market. Money market is short-term securities are traded in the money market, which is the maturity is 1 year or less than 1 year. Money market is a good place for individuals, bank or companies to park their cash for a period of time 1 year or less than 1 year. Example of money market is commercial paper and bank notes, which is short-term bank loan. Next, we go to the capital market. Capital market is the market for relatively long-term securities and the maturities is greater than 1 year, which is different from money market. The purpose for capital market is to raise money for their long-term purpose by issuing stock shares and selling corporate bonds. Example of capital market is bonds and shares. Bonds is a financial instrument that acts such as loan from an investor to an issuer, such as company and government. Next is physical asset market versus financial asset market. Physical asset market, also known as tangible or real asset market. Example for physical asset market is real estate, computer, and machinery. Next is financial asset market. Financial asset market is also deals with stock, bonds, notes, mortgage, and also other claims on real asset. Mortgage is an agreement between you and the lender that gives the lender the right to take your property if you fail to repay the money you have been borrowed plus the interest.
So the next type of company is a private and public company. So the private is a place our transaction are worked out directly between two parties, and the purpose is with raising capital through a private investor. So the example company I use is Uber. They are at the first started up of the company. They use a private market for raising capital with get private investor before he become a public market. So next we go to the public. Public is a place where standardized contracts are traded on organized exchange. So they provide a platform where a company can raise capital with following in share, bond or other securities to general publics. So for example, company using it, Apple and Tesla, they sell their share at the New York Stock Exchange, so everyone can buy and sell their share at there. So the next we go to the spot versus future markets. So spot is what is spot? Spot is the asset are being bought and sold on the spot. So there they enable to immediately buying and selling of asset like commodities, currencies or securities at the current marketplace. For example, like gold or forex trading. So when a gold increase, they'll sell their gold, or if the gold decrease, they buy the gold. Same like forex. So we go next to the future market, when assets are being bought and sold on the future. So they allow a participant to buy or sell asset at the pre-made price for delivery or at future date. Example, with like farmer sell wheat at 2,000 ringgit per ton in the 3 months from now. So price for the wheat at 3 months from now, around 2,000 ringgit per ton.